for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, tech dominates a U.S. market rally. The Nasdaq jumping 4% at one point. This all happening on the eve of Apple's next iPhone launch and as well as Amazon's Prime Day. We'll have all the stories shaping technology. Plus, confirmation hearing day one. Amy Coney Barrett appears before the Senate Judiciary Committee. We'll speak to someone who voted on 12 Supreme Court nominees. Former Montana U.S. Senator Max Baucus. And election security. It's at the top of everyone's mind, including Cloudflare CEO Matthew Prince. What his company is doing to thwart cyber attacks ahead of November the 3rd. These stories in just a moment, as well as highlights from my interview with Disney CEO Bob Chapek in the last hour. The media giant has announced a massive reorganization of its entertainment and media empire, spurred in part by the rapid success of Disney+. Shares jumped on the news in after-hours trading. But first, well, let's get up to speed with all this market move. Tech dominating the day, Nasdaq registering its best day since April. Bloomberg's Abigail Doolittle. Give us a bit of a picture here. What a day.
Well, it was certainly a risk-on day for tech, the mega cap technology and internet stocks. Carolina, as you mentioned, the Nasdaq 100 having its best day since April. Lots of strength here. In fact, the fourth up day in a row for the major averages here in the U.S., including that Nasdaq 100. The first time we've seen that in more than a month. So we've had all of this volatile action, speaking to the big gains we had in August and the big sell-off in September. Now we have the Nasdaq 100 and the S&P 500 trying to take back on those all-time highs made at the beginning of September. A nuance to this, however, is this year in 2020, these technology stocks, these big internet stocks, they are considered to be quote-unquote defense. That's because these stocks are been doing so well. The companies have really been outperforming from the stay-at-home trends. So the top performer on the day, it's really pretty stunning. Apple up more than 6%, its best day since July 31st. That was when the stock had surged by 10% on the back of that strong June quarter. That's the degree of the buying power that we're seeing, how much the investors and traders, momentum folks really believe in this story ahead of their iPhone, that 5G virtual event tomorrow, where 4 new phones are expected to be revealed, taking along Amazon.com, which, of course, their Prime Day event starts tomorrow. Facebook higher, Deutsche Bank raising price target, and then Microsoft also higher, up 2.6% on that board right there, Caroline. More than 30% of the Nasdaq 100's value. So, you know, it was a strong rally for big tech, but it was also a narrow rally. And I said net risk on relative to stocks and big tech and the internet companies. Not right across the board, though. Of course, for the holiday, bonds were closed, but we had the yen rallying against the dollar for a second day in a row. In fact, the best 2 days for the yen going back to the middle of September. Crude oil down as perhaps a bearish tell on actual economic activity. And then as we have some disturbing virus data, especially out of Europe and globally, the transportation average up just slightly. That's a really good tell, or at least it was back in January, Caroline, in terms of what traders are thinking around the virus. So yes, very risk on for tech and big internet stocks, but some other clues to watch as the week progresses. But overall, we'll give it a risk on star, if you will, Caroline.
It certainly was a risk-on start. We're excited to see where it lines up tomorrow. And all of that, of course, on a holiday for many with the Treasury market not open. Abigail Doolittle breaking it all down for us in terms of the tech moves. Now, of course, it was a day of politics as well. And the Senate Judiciary Committee wrapped up the day one in the Supreme Court confirmation hearings for Judge Amy Coney Barrett. Now, today included opening statements which, well, erupted into a partisan clash over the timings of the hearings and how Barrett's potential confirmation could dismantle the current healthcare system. Two senators who are both facing big elections in coming weeks, Senator Lindsey Graham of South Carolina, whose seat is threatened by a newcomer, and Senator Kamala Harris, of course, the Democratic vice presidential candidate, pulled, well, no punches. Take a listen.
This is a vacancy that's occurred through a tragic loss of a great woman, and we're going to fill that vacancy with another great woman.
I do believe this hearing is a clear attempt to jam through a Supreme Court nominee who will take health care away from millions of people during a deadly pandemic that has already killed more than 214,000 Americans.
Insight now from someone who has not voted just for 1, 2, 3, but a dozen Supreme Court nominations. He was also considered an architect for many of those parts that make up the current healthcare system. Former Montana Senator Max Baucus. Senator, it's wonderful to have you with us. Your judgment of the first day of proceedings, was it more volatile than you expected or less?
It was quite volatile and basically what I expected. The 800-pound gorilla in the room clearly is November 3rd. The elections for president, the elections for the U.S. Senate and House. That's all this is all about. It's changed so much over time. The first nominee who came before me when I was on the Judiciary Committee was Justice O'Connor. Times were so different back then. First of all, there was no politics involved. Those hearings then, and most of those that followed, were inquiries into the competence and integrity and the temperament of the nominee. We asked a judgment we passed on as senators, and she was supported 99 to nothing. Everybody who was present voted for her on the Senate floor. Now, contrast that with the hearing today. First of all, it's COVID is a cloud in the room and in the country and causing the death of so many people. Second, Republicans were not looking to ask questions. They just wanted to get her voted on as quickly as possible. Democrats know they don't have the votes to stop her, so they're using the opportunity to criticize Trump, criticize his probability in trying to overturn the Affordable Care Act if he succeeds as president, and the probability that Judge Barrett might also rule if she's on the court to overturn the Affordable Care Act. So it's all politics. It's sad, frankly. The Supreme Court and federal judiciary has become so politicized over time, and frankly, the court, the third branch of government, should really be independent. It should be judicious. Sure, they're people. They read newspapers, and they have views just like everybody else. But by and large, most of them are really good people. They try to not get involved in politics, and unfortunately, as time progresses, the Senate and the country is making the Supreme Court more political, and it's unfortunate.
It's interesting, actually. Amy Coney Barrett herself spoke of, well, the fact that she feels that courts aren't really designed to be this arbiter of public policy. Just take a quick listen for us, Senator.
Courts have a vital responsibility to the rule of law, which is critical to a free society. But courts are not designed to solve every problem or right every wrong in our public life. The policy decisions and value judgments of government must be made by the political branches, elected by and accountable to the people. The public should not expect courts to do so, and courts should not try.
Senator, whatever the case, though, if she is indeed become the next member of the Senate of SCOTUS, she will shift it to the right. And what do you think that first and foremost means for policy when it regards healthcare, or something you are a key expert on?
Well, her past opinions indicate that if she's on the Supreme Court, she might rule to overturn the Affordable Care Act. 3 years ago, she roundly criticized Chief Justice Roberts' decision that affirmed and upheld the Affordable Care Act. So if she's on the court, presumably she'll be inclined to not agree to uphold the Affordable Care Act. I must say, though, that all justices are very concerned about their legacy. They want history to speak well of them. And so they'll be taking their job very seriously. Sure, she's a conservative. Sure, she likes Scalia. Sure, she wrote that opinion critical of Chief Justice Roberts' decision. But she is going to take that job very seriously, and others on the court will too. It's very interesting. Over time, the Supreme Court is a bit of an organic body. It's hard to predict. There shifts, there changes. Different judges, depending upon their skills, can persuade other justices to their point of view. So I think it's clear that she's going to be confirmed. It's clear that she's inclined to overturn the Affordable Care Act, and that has very dark, in my judgment, implications. But it shouldn't be taken categorically that she's going to rule that way. And there are always ways to skin a cat. I mean, Congress can find other ways to protect the people's health care. They can find a way to make sure that pre-existing conditions are honored by insurance companies. There are things that, things change. So I do think that she'll probably again be confirmed, and it's sad that the proceedings today are just so political that we'll have to find a way to uphold the act as best we can. And if Biden's elected, he'll be working very hard to uphold the act, irrespective of what the court might do.
If Biden's elected, do you anticipate justices to be added to the court?
I hope not. That further politicizes the court. The last time it was attempted was 1937 when FDR tried and that got nowhere. But it did have an influence on the court. Subsequent Supreme Court decisions tended to reflect FDR's views. The size of the court's been changed 6 times in American history, but I think once you go down the road of starting to, quote, pack the court and add justices that you like, then that makes it even more political. That sets the precedent for further court packing on down the road. I think it's a bad idea.
Of course, you were not only a former senator, but a former ambassador, U.S. ambassador to China. I'm interested, therefore, Ambassador Borges, in your perspective on the relationship going forward with the U.S. and China. It's interesting today we saw significant moves. Well, we've seen continued rally in the Chinese yuan, for example, versus the U.S. dollar on this hope that anticipation that a Biden win will be a change in relationship between the U.S. and China. It will some way reset. Do you think that will be the case?
Well, full disclosure, I'm supporting Joe Biden for president. In fact, I'm raising money for him. I think there will be a change if he's elected. America still, even under President Biden, is very concerned with China. They're concerned with China's action in South China Sea and Hong Kong, and concerned with American companies not getting proper market access and subsidies in China. But Joe Biden will be very concerned. However, it will be an approach which is more stable than the approach of our current president. Joe Biden will formulate foreign policy with China and announce foreign policy with China, not with Twitters, not with tweets, but rather he'll work through a Secretary of State, his defense secretary. He'll work to try to find agreements with President Xi Jinping. It'll be difficult, be very hard, but it'll be more predictable. He also will work with our allies in Europe, Japan, South Korea. And that's going to cause the Chinese to be very, very careful with any subsequent steps they may want to take, because they know if the United States and allies are working together, that's a powerful force that's going to be difficult for the Chinese to oppose. The main point here is Xi Jinping wants to work with the United States. Joe Biden wants to work with China. American people really basically kind of like the Chinese, and American business wants to do business in China, and vice versa. I've talked to a lot of Chinese businessmen who very much want to increase their business in the United States. So there's a strong commercial tie here. We're joined at the hip economically, but nevertheless, the politics is going to be difficult. I think President Biden will first focus on strengthening the U.S. economy, infrastructure, education, et cetera, before he really makes a big change in policy toward China, because it's going to be difficult, and it's not going to change a lot. It'll be more predictable.
An awful lot to be seen, to unravel. Wonderful to have time with you, former ambassador, former senator, of course, and great to speak with you once again, Max Borges. Now, coming up, Facebook CEO Mark Zuckerberg changing his stance on Holocaust denial content after years of controversy. We'll have that story next. And later, shakeups in the House of Mouse. Disney is changing up its management ranks to refocus the entertainment giant on its thriving Disney Plus streaming business. Part of my conversation with Disney CEO Bob Chapek later this hour. This is Bloomberg. Facebook says today it will now ban posts about denial of the Holocaust. Now, the move is a reversal of a long-held and controversial policy. CEO Mark Zuckerberg was highly criticized back in 2018, for example, for saying in an interview with Recode that Facebook didn't remove the content because, quote, there are things that different people get wrong. For more, I want to bring in Bloomberg's Kurt Wagner, who covers the company for us. A lot of emotion over at Facebook, I'm sure. I mean, Mark Zuckerberg himself, of course, a Jewish leader of the business. But what did it say to you that he's sort of done this about-face?
Yeah, it was surprising because, as you mentioned, just 2 years ago, he used this specific example as a reason for his defense of free speech on Facebook, right? He said, this is something that's hurtful to me, and yet I'm going to allow people to say this. That's how much I believe in free speech. So the fact that he kind of changed his mind on that, I think, is a sign that certainly Facebook is starting to look not just at free speech as being this kind of blanket statement that covers everything, but really looking at, is this statement or do these beliefs actually harm people? And the company decided that, yes, this is actually causing some harm or could cause some harm, and therefore it needs to come down.
Where does this potentially go from here? Because, of course, as your story so eloquently puts, this is not the only form of denial that we see on Facebook.
No, not at all. And we asked specifically, hey, does this new policy basically cover all types of genocide denial? And the company said, no, this is specific to the Holocaust. Obviously, there are many other conflicts that have happened over time that people could go onto Facebook and basically, share misinformation about. While this is certainly a step in the right direction, it's never all encompassing, right? And we've seen this before. These policies are very rarely catching everything. So my guess is that, they may take another step at some point if they start to see more of this. But at least for today, yes, it's just for the Holocaust.
We saw of course, statement there. Mark Zuckerberg himself took to Facebook to lay out his focus on this. And he said, my own thinking has evolved. Do you think thinking will continue to evolve? It already has continued to evolve to a certain extent at Facebook, hasn't it?
It has, based on the fact that he's even making this decision at all. It's always been said the best way to change Mark Zuckerberg's mind is to give him the data, show him the numbers. And in this case, they actually pointed to a study that Facebook helped conduct where they found that almost a quarter of people between the age of 18 and about 40 actually thought that the Holocaust was a myth. And so if you look at those numbers and you say, wow, a quarter of people don't believe this, this is a dangerous thing to continue to let, spread on our service. I think those numbers in particular seemed to really help him make this decision.
How extraordinary, a quarter. And so I'm sure we've already seen what misinformation, whether regarding QAnon and the like. Are you anticipating further steps further down the line? Do you think it'll be post-election? Is it all in the run-up to the election these things become such hot potatoes?
Well, I think part of the reason it's happening now is because the election is coming. Mark Zuckerberg himself has said he's worried that there could be civil unrest, there could be violence. I don't know if that applies necessarily to Holocaust denialism, but certainly to QAnon and other groups like that might be using Facebook to kind of spread misinformation. I think the last thing they want to do is get to election day, see things playing out in the real world that are unsafe, potentially violent, and say, wow, that started because of conversations happening on our service.
Kurt, always great to see you in the flesh and picture. Kurt Wagner joining us on All Things Facebook. We thank you. Now, still ahead, all eyes, of course, on Apple. The company is set to launch its first ever 5G iPhones at a virtual event later tomorrow. And the stock was up, get this, 6.5%. I mean, that actually adds about $120 billion to its market capitalization. Remember, it's a $2 trillion company. We'll have more on that next. This is Bloomberg. All eyes on Apple tomorrow. The company is set to launch its highly anticipated 5G iPhone at their virtual high-speed event from Apple Park. Now, here with a preview and more on what this phone could mean for Apple is Jerry Long, his equity research analyst at Deutsche Bank. Quite the moves in the market ahead of this. I mean, 6.5% rally for a stock this large for a company with this market cap is phenomenal. People getting overexcited?
Yeah, the moves today and frankly over the course of this year, it certainly highlights that investor expectations for the next generation of iPhone products are certainly high. iPhones still account for the majority of Apple's revenue, and the feature set in this particular cycle appears to be pretty packed. You mentioned 5G technology. They also will release a broader variety of screen sizes, the broadest variety, in fact, in the history of the product, in addition to a slew of other features that I think we think has investor expectations relatively high.
Relatively high, and interesting, of course, that to a certain extent, the infrastructure in America isn't quite ready to support it. We know that Verizon has done a lot of investing, and 5G is fast and furious, but only in limited parts of certain cities, and perhaps to a lesser extent at some of the other telecom providers. How much will a 5G phone really make much difference when you have one in your hand?
Certainly a good question there. I think what's changed in the last couple of years, if we think back to the last time that Apple materially changed the speed that the phone could achieve, people were buying cell phones, buying iPhones every 2 years. Now the average buyer of an iPhone holds it for a longer period of time. So we think that a lot of consumers will be interested in, quote-unquote, future-proofing their products here, buying 5G, even if in their specific geographical market 5G isn't necessarily pervasive, because if they plan to hold on their phone for 3 or 4 years, this is some technology that they're going to want to take advantage of going forward.
And of course, the infrastructure is there in China. How much is that going to be a focus for how sales continue?
Yeah, China certainly is a large and meaningful market for Apple. It continues to have a luxury presence, a luxury perception if you do have an iPhone in China. China's significant, especially as 5G is very pervasive there, and we expect them to do well in China going forward.
Of course, we have earnings coming a little bit later. What sort of data do you think that you'll actually be able to pass from Apple when they have delayed, of course, the unveiling of their most important feature and product of the year?
This is going to be a really interesting quarter for Apple for several reasons. Number one, the iPhone has never been delayed this much into the quarter in the history of the product. And typically, if we had been talking, probably call it a month ago, if they had released on time, Apple would typically have about 5 to 6 weeks of real sales data about these new iPhones, from which to maybe forecast what the December quarter might look like in terms of their financials. Apple, next week or a couple weeks from now, when they actually report earnings, Apple will have considerably less data, perhaps only a week of new iPhone data from which to forecast. So it's certainly going to be a different quarter for Apple. In the last couple quarters, they haven't actually guided. So we'll see what happens as we approach earnings.
We want to thank you, Jerry Ong. It's going to be an interesting day tomorrow. It's going to be an interesting set of numbers from them later in the month. Equity research analyst at Deutsche Bank is going to be very busy. We thank you very much for spending some time with us ahead of that. Now, some breaking news for you, because President Trump has been testing negative for COVID, according to the White House physician. Trump has, in fact, tested negative on consecutive days, we understand. This is important as we see President Trump start to want to hit the campaign trail once again. We have seen him out and about with masks. He, of course, returned to the White House last week and back to the Oval Office as well, having left hospital but 1 week ago. It was, of course, Monday this time last week that he was heading back to his residence. So we understand he's tested negative on consecutive days, so says the White House. Coming up, an extended period of remote work due to COVID-19 pandemic has opened the floodgates, of course, for cyber criminals. We'll speak to Cloudflare CEO Matthew Prince about the digital disruptions facing companies around the world and how his company is benefiting. Shares up more than 20% on the day as they launch a new product as well. We dig into what he's seeing in terms of cybersecurity and new product launches. From New York and from San Francisco, this is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York, in for Emily Chang. And now shares of cybersecurity provider Cloudflare, they soared today after the company unveiled Cloudflare One. It's a new cloud-based platform that aims to keep remote workforces more secure. Joining us now, who better than Matthew Prince himself, the CEO of Cloudflare. I mean, markets are funny things, but you have to tip your hat to you. Up more than 20% on the day is quite phenomenal. Talk to us about this new network as a service platform.
So Cloudflare One is, we really think of as the future of the corporate network. The traditional corporate network was built around a castle and moat approach, where you put all your employees and all your secrets in a castle, and then that's where you did all your work. And that's really faced a series of challenges over the last 5 years, where you had almost like 4 horsemen that were attacking it. Mobile had people working more from the road. The cloud meant that secrets weren't necessarily stored in the castle. Software as a service accelerated it even more. And then this year, obviously, COVID has us all working remotely. And so at Cloudflare, we realized that there was something that we could do about this, help empower our customers to have a future-proof corporate network and empower what is known as a zero trust model. And so that's what we've launched, leveraging Cloudflare's network, which spans over 200 cities around the world, in order to deliver this next generation corporate network to all of our customers.
How worried are your customers about the resiliency of their cybersecurity as it stands, as so many now work from home and perhaps will do in the longer term as well?
You know, it's one of those things. Cloudflare just celebrated our 10th anniversary, and I thought back on how much different the world would have been had we all gone through the COVID pandemic in 2010 versus 2020. And so I think one of the things that we're proud of as a company is that we've enabled our customers to be able to scale to unprecedented demands and also deal with what have been incredibly challenging cybersecurity challenges over the course of the last 7 months. And our team is proud of that work, and our customers are more reliable because we exist.
Yeah, you've been doing a lot of studies with Forrester, I understand. Any data that really shocked you in terms of how much more instances there are of hacks, phishing, some sort of capability of piercing that veil of security at companies?
What I think everyone realized if they were running a corporate network before this year was that they were really putting Band-Aids on trying to hold things together with VPNs and firewalls and load balancers, and they kept stacking box after box. And yet they saw what the challenges were. And so when Forrester talked to various people running corporate networks, almost 80% said that they realized that what they were doing didn't make sense for the future. And they really came to understand that because of what we are all living through with COVID. And so by providing this new service, we're excited, and we've been really proud of the customers that we've earned and are helping make sure that they can continue to thrive during these challenging times.
Of course, all of us are not only focused on working from home, COVID, but also the presidential election here in the United States, and many worried about some of the implications for hacking and cybersecurity threats that build up amid the campaigning. Is that something that you're seeing? How is that something that you're navigating?
You know, in 2016, when we watched the election, we saw other technology companies have their platforms be used to actually subvert the democratic process. We realized as a company that we had actually a duty to do something to make sure that democracy functioned the way that it should. And so we launched something called the Athenian Project, which today it helps for no cost local and state officials. And we're today helping more than half of US states protect their election infrastructure. And I think we're really proud of helping make sure that the parts of the election infrastructure that we can stay safe and secure. So far, and I'd knock on wood if I could, but so far it doesn't seem like cyber attacks have been a significant risk. But I think that the action that Microsoft took today in helping down a large botnet is very important for us to stay in front of this, and we are monitoring it, and we have a team that stands ready 24/7 at no cost to help any local or state officials that need help with cyber attacks in the time that we have in the election ahead.
Kudos for you to fill that. Talk to us about botnets and about the prevalence of just how risky is it out there as an individual when navigating online business or indeed just pleasantry, just interactions.
You know, there are a number of challenges that come online, and what Microsoft did today was take down what is known as a large botnet. And what that is effectively a number of different computers, and those computers could be like the laptop that you have, but it could also be the street camera, the closed caption television camera. Those all have computers in them, and hackers have figured out how to infect them and take control of them. And the risk that creates is that can then be used to potentially overwhelm legitimate infrastructure with something like a denial of service attack. And so Microsoft helping disrupt that botnet is a very positive factor. And then we at Cloudflare work every single day to make sure that those botnets that are still active can't harm our customers or create any problems for them.
Well, we congratulate you on the new product, on the focus on philanthropically giving your time to protect the US election. And I'm sure you're going to say, as a CEO, you don't look at the share price, but up more than 20%, it was a pretty good day. Cloudflare CEO Matthew Prince, great to have some time with you. Now, coming up, censorship concerns continue to dog social media leading up to the election. We'll take a look at YouTube's battles and why one conservative personality continues to taunt the tech giant. That's next. And Disney shaking up its business to refocus on its thriving Disney Plus streaming service. Our conversation with CEO Bob Chapek. That's next. This is Bloomberg.
I think what we want to do is take a consumer-first approach. We really want the consumer to guide us on how they want to see content. Right now, they're telling us that they really want to see more and more content on Disney Plus and Hulu.
Social media companies, Facebook, Twitter, they've been under hard scrutiny leading up to the US presidential election. But what about where a quarter of American adults get their news? YouTube. YouTube personality Steven Crowder, in fact, has voiced his concerns over the popular video platform. Take a listen.
I thought open exchange of ideas was welcome on YouTube. This is why no one believes you. This is why no one believes you, and I hope that there is some legislation that forces you to answer for this idea of being a public platform.
Let's dig into this particular individual, Mr. Crowder. Some more with Bloomberg News' Mark Bergen, who's written this morning on Crowder's battle with YouTube. So hating on, the hand that feeds to a certain extent. Talk to us about what conservatives have been voicing, and this particular comedian conservative in particular. He's been doing a dance with YouTube and seems to be hating on their lack of consistency, right?
Yeah, certainly publicly. I think in private, and he told me that he wants to have a good working relationship. He said the site has told him that it welcomes conservatives and it wants conservatives there. And I think he's become this really fascinating figure because Ted Cruz mentioned his treatment last month during an antitrust hearing around Google. He's become sort of this lightning rod figure, stand-in for what a lot of Ted Cruz and other politicians claim is anti-conservative bias being silenced. And at the same time, he's kind of rose to fame last year after this. Another YouTuber had accused him of repeated harassment, and since then he's gained a much bigger audience and has become probably one of the most popular political commentators on the site.
It's always pretty, leaves a bad taste in your mouth when it's through harassment allegations that someone seems to win more and more fans. But I'm interested in the role of YouTube as some sort of gatekeeper here. Interestingly, of course, we were focusing on the Facebook story earlier that they, of course, are now trying to push back and clamp down on Holocaust denial. But we know that that can often unfold an awful lot of other questions as to why they're not gatekeeping in other areas. How does YouTube balance that?
So with Google and YouTube, it's more complicated in the sense because Google is actually sort of supplying the economic system for a lot of this, right? So the controversy around Steven Crowder was not necessarily just that his videos exist on YouTube. That last summer they removed him from their advertising program, and then in August they returned him. That has been some employees and other critics have been upset about that. Google has taken a lot of heat on the right for some of their decisions to pull down the Federalist as a conservative website for some of its hate comments. So what Google has is they have the effect they are the dominant digital advertiser, and they provide not only the platform but a lot of the economic fuel and the commercial success, and that's where it's tied up and becomes much more complicated both for the company and then for any potential legislation going forward.
And talking legislation going forward, there is going to be a hearing, right? Virtually on Capitol Hill. Talk to us about what we can expect.
So this is set for later this month. It will be around Section 230, right, which is the part of the Communications Decency Act that deals with sort of providing, shielding the tech companies like Google and Facebook and Twitter from liability. President Trump and other politicians on both the right and the left have suggested rewriting that law. Of course, there's a lot of disagreement about what that would look like, and then the bigger question is if the platforms become actual liable for the content, they're probably going to be much more aggressive in their moderation, given that they have sort of legal responsibility. So that could have some unintended consequence where they actually start to remove a lot more people from their user-generated sites. Whereas in the past, where they have limited regulation, they've been able to kind of keep this much more free market of ideas.
Mark Bergen, always a joy reading your stories. It's a great one. I urge people to go and see your writing on Steven Crowder. Mark Bergen, Bloomberg News, we thank you. Now, as we've been covering, Disney said today that it's making massive changes to the management ranks and organizational structure to refocus on its Disney Plus streaming business. Now, I spoke with Disney CEO Bob Chapek earlier about how the move will impact content distribution. Take a listen.
Well, I think what we want to do is take a consumer-first approach. We really want the consumer to guide us on how they want to see content. Obviously, we've got the best content out there, the greatest franchises, the greatest executives steering the direction of our content, the greatest filmmakers. But the consumers need to tell us exactly how they want to enjoy our content. Is it at home? Is it in theaters? Is it on our platform of Disney Plus? And we're going to go ahead and take their cues. And right now, they're telling us that they really want to see more and more content on Disney Plus and Hulu.
I mean, that's, of course, you're getting learnings from that. You've just released Mulan, went direct to consumer via Disney Plus. You've announced that Soul, a new production that you're bringing out is also going to go that way, navigating away from theaters. What's your gut telling you in the longer term? Is this just what's going to happen in the pandemic, and will more and more you be going straight to Disney+?
Well, I think consumers will have their choices. Obviously, the pandemic has affected the speed with which we're looking at things. But I will tell you that this move that we made today would be happening with or without pandemic. We want consumers to have more choices. That we want them to steer the ship in terms of options. And obviously, we have a lot of great relationships with legacy distributors. Some of them are inside our own company. But at the same time, we're going to take our cues towards the future, looking at it with a sense of vision and continuing the road that we've been on towards a direct-to-consumer future for the Walt Disney Company.
This has been, I'm sure, days, weeks, months in the making, Bob. But it was interesting that just last week we had Dan Loeb, an activist investor, basically calling you to focus more on content, saying, look, cut your dividend, invest that entirely into new content for Disney+, roll up together Hulu, ESPN+, Disney+ into one. How much did you take that learning from Dan Loeb? How much did you already, have you got a sort of amount in your mind as to how much is going to be going on the making of content?
Well, as you suggested, this has been in the works for many, many months as we've seen the trend and the receptivity and the acceptance of Disney Plus as a first choice for consumers. And as it pertains to our investors, we really like to hear from our investors and hear what they're thinking and appreciate any thesis that they want to forward. At the same time, we've got to do what we believe is right for our business. And in this particular case, we agree that direct-to-consumer is a huge opportunity for the Walt Disney Company. And but to do that, we're going to have to make huge increases in our investment in our content. And we're ready, willing, and prepared to do that. But I'm not going to comment on any decision-making that our board will do in terms of a dividend going forward.
Bob, what about the amount that you'll spend? Netflix spends about $15 billion a year on content. Are you looking in that order of magnitude?
Well, again, I'm not going to comment on any specific number, but what I will say is that we will have something new virtually every week on our platforms across all of our franchises. You know, between Pixar, Disney, Marvel, Lucas. I mean, we've got some really great content, and our guests love it. And there's so much story to be told, so many avenues to do it in, and that's really where we're focusing is how do we go ahead and really take those content creation centers that we have inside the company, those franchises, if you will, and catalyze them to make the content that we need across all of our distribution channels, but especially our direct-to-consumer channels.
I have to say, of course, you were previously chairman of Disney Parks, Experiences Products. That must have hurt a lot to have to announce the 28,000 job cuts announced last month, a quarter of U.S. theme park workforce. Talk to us how difficult it is to make such decisions at the moment and how optimistic you are about hopefully returning to growth.
Well, you know, our cast members are the center of the magic at our parks. Every single cast guest interaction is an opportunity for us to make magic. So for us to have to make a decision like we did is particularly painful. But we're looking forward to a more optimistic future. One where we can welcome our guests beyond, you know, a particular limit every day in the park to keep that 6-foot social distancing and open up our cruise ships and reopen Disneyland hopefully someday and really move forward with our business so that we can employ as many cast members as possible and bring the magic back to our guests. And that's what we're all about.
Disney CEO there, Bob Chapek. Still ahead, a Prime Day preview. Even in the face of economic and public health crisis, some anticipate Amazon's annual shopping event to hit an all-time record. More from Amazon veteran Melissa Burdick. This is Bloomberg.
We are going to do a SPAC ourselves with our own capital as an investment vehicle, where we're not going to take, promote. We are going to put our own money in because a company, and it's to repeat, it's ideal for companies that were ready to go public 12 months from now and want to do it with certainty. Maybe 6 months earlier. And those are the ones we'll invest in.
The summer of SPAC becomes the fall of SPAC. That was SoftBank's Rajiv Misra. Of course, he's helming the Vision Fund, and he's saying SoftBank's Vision Fund will outline plans for a blank check company in the next 2 weeks. You saw him there at Bloomberg's Eric Schatzker, Guggenheim's Scott Meinert, and BNY Mellon's Catherine Keating as part of Milken Institute's virtual conference, which kicked off today. We'll bring you more highlights from the conference all week. Now, initially delayed from July, a late Amazon Prime Day means an early start to the holiday shopping season. Brace yourselves. And analysts predict the e-commerce event will be the biggest in Amazon's history. Joining us for a Prime Day preview, we like a bit of alliteration, Melissa Burdick, co-founder and president of PackView, an e-commerce advertising and intelligence platform. She brings, of course, a decade of prior experience at Amazon, where she helped launch the CPG health and beauty retail business. She did so much more, early leader of Amazon Media Group as well. Melissa, how do you think it's going to go? It feels as though it could break all records.
Absolutely. I mean, I think that already the analyst eMarketer predicts that this event will be up 43% this year over last year and hit almost 10 billion in worldwide sales. A big thing too is the impact to Prime membership that will surpass 50% of the US population, which is huge. So definitely think that it's going to be a big event. Just all the traffic's moving online. People are not shopping as much in store and really being driven to these deals.
This, of course, sadly, COVID has been a storm that for Amazon has been perfect. How are you seeing them evolve in this Prime Day versus another? What sort of moves have they made that pushes the options further? I mean, it's interesting that they're getting into luxury items now, which was always thought of as an area that Amazon just couldn't pierce.
Yeah, I mean, I think that Amazon is well known for, basically getting into everything. I think that the fashion and, high end has always been a little bit of a challenge for Amazon platform. But for example, one of the offers that they have for this Prime Day is around the drop, which is their influencer-led high fashion that creates a sense of urgency to buy within a certain time frame. And so, being able to focus on things like that will definitely help them. But I think this Prime Day is still going to be, primarily their bread and butter around their devices, electronics, toys, and things like that too.
It's been interesting that Amazon have been iterating with advertising, and it's almost been talked of as this other new revenue stream that many people are under realizing the extent that they will be successful. What do you make of that, Melissa?
Absolutely. I mean, that's our business. We're an automation platform for advertising on Amazon. And what we're seeing is that our clients are increasing their advertising spending this week by 3x. Even if they're not participating in Prime Day, they're increasing their budget so they can capture the traffic. And so I think that, this week kind of kicks it off, and we'll see it heading into Q4. So we really predict a lot of advertising revenue coming into Prime Day as well.
What about the competition, though? Because, of course, to keep in line with Amazon's Prime Day, we've seen Best Buy say that they're going to be launching their deals. Target's coming out with its own as well. And these companies are, too, sort of adopting an advertising model as well. Is everyone going to be converging on the same sort of business model?
I mean, it sure seems like it. And actually, Walmart preempted, as soon as Amazon announced their Prime Day, Walmart came out with their big sales day. I think it started yesterday. So I think that all of these platforms, as soon as Amazon launched theirs, they kind of piled onto it and had their own deals and offers, which makes it hard for the manufacturers too, because it's hard for them to be nimble and be able to have all these deals, especially when supply chains and inventory is so constrained. And so I noticed even today on Walmart, there was some focus on third-party merchant marketplace having deals, and that really helps, being able to spread that across. But to your point about the advertising component, yes, I mean, that is a big focus. A lot of these platforms, retailers are becoming self-service ad platforms and rolling those out just like Amazon. Because this advertising revenue really helps their bottom line.
And lastly, geographical footprint here. Of course, we're expecting $1 trillion in US e-commerce sales by 2022. That's what Karen is currently saying. You're looking at how much could be raised from this Prime Day worldwide. Where is being underestimated versus the US? Where could be eclipsing the 50% of Prime memberships that could be coming on tune soon?
I mean, it's a great question. Prime Day, the U.S. kind of leads it. And then, we've seen international countries kind of falling in line after the U.S. But, there's really no telling. It's pretty big opportunity in general.
And one that we see PackView evolving on to Melissa Burdick. It's great to have some time with you, of course, 10-year veteran over at Amazon, PackView co-founder and president now. And that does it for this edition of Bloomberg Technology. Bloomberg Daybreak Australia is going to be coming up next, talking all things of the technology rally that we saw today in the US, how that continues to filter on into Australia trading and indeed further into Asia, where we saw markets really tick up in Hong Kong and on mainland China. From New York, from San Francisco, this is Bloomberg.